Welcome to Relax, We Got It. A private limited company is a type of business entity that is privately held and limits the liability of its shareholders. It is a popular form of business organization in many countries, including the United Kingdom, India, and Singapore. Characteristics of a private limited company. 1. Limited liability. The liability of shareholders is limited to the amount of money they have invested in the company. In case of any losses or debts, the shareholders are not personally liable beyond their share capital. 2. The number of shareholders. A private limited company can have a minimum of 2 and a maximum of 200 shareholders. It cannot offer its shares to the public and the shares are not listed on the stock exchange. 3. Separate legal entity. A private limited company is a separate legal entity from its owners. It can own assets, sue, and be sued in its own name. 4. Perpetual succession. The existence of a private limited company is not affected by the death, insolvency, or retirement of any of its members. The company will continue to exist until it is legally dissolved. 5. Directors. A private limited company must have at least 2 directors. The directors are responsible for the management of the company. Advantages of a private limited company. 1. Limited liability. The liability of shareholders is limited to their investment in the company. This protects their personal assets from the company's debts and losses. 2. Separate legal entity. A private limited company has its own legal identity, which means it can own assets, borrow money, and sue or be sued in its own name. 3. Easy to raise funds. Private limited companies can raise funds by issuing shares or taking loans from banks and other financial institutions. 4. Perpetual succession. The company has a separate legal existence, and its existence is not affected by the death, insolvency, or retirement of any of its members. This ensures the continuity of the business. 5. Credibility. Private limited companies are perceived as more credible and trustworthy than sole proprietorships or partnerships. This can help in attracting customers, suppliers, and investors. Disadvantages of a private limited company. 1. Cost. Setting up a private limited company can be expensive, as there are legal and administrative costs involved. 2. Limited control. Shareholders have limited control over the company. Major decisions are taken by the board of directors. 3. Regulations. Private limited companies are subject to various regulations and compliance requirements, which can be time-consuming and expensive. 4. Disclosure of information. Private limited companies are required to disclose certain information, such as financial statements, to the public. This can be a disadvantage for companies that prefer to keep their financial information private. 5. Limited growth potential. Private limited companies have limited growth potential, as they cannot raise capital through public offerings or issue publicly traded shares. In summary, a private limited company is a popular form of business organization that offers limited liability to its shareholders. It has its own legal identity and can raise funds easily. However, it is subject to various regulations and compliance requirements, and shareholders have limited control over the company. Thank you for watching our video. Hope you liked it. Like, share, and subscribe.